A one-bedroom condo, what is someone looking at for a down payment to compare that to renting?
Love this question. So this is something that is in my wheelhouse. Like where some of the other stuff you're asking me about, it's not things that we deal with. But with that, we do that all the time where we'll say, hey, let's just, even if the person, let's say, qualifies for, or they don't have a criminal record and they just want to go, rent a one-bedroom condo. We're like, okay, it'll cost you, let's say, $1,500 a month. I'm just using a number. It's not like a specific example. $1,500 a month to rent this condo that is going to cost you first month, down payment deposit, last month, and up to maybe another 1 or 2 months of security deposit. So that's about $5,000, or $6,000 that person's going to put out to get that. They could buy a house, depending on their qualifications, with anywhere between 3% and 0% down. Where we have many programs to even if the person is not a first-time home buyer and they don't have perfect credit, we actually have one program within our FHA program where we actually give them a second mortgage. So it's a 3.5% down payment, and then we give them a second mortgage for the other 3.5% down. So in that situation, they could buy with nothing out of their pocket, and on top of that, you say, okay, well, what about closing costs? How much are closing costs? We can allow for what's called a seller credit. So the seller can provide the buyer up to 6% of the loan amount, 6%. So let's say it's a $200,000 condo we're talking about. They literally are putting nothing down, and they can get up to whatever, like call it $5,800 in seller credit to cover their loan closing costs. So they could literally come out of pocket with nothing to buy a house, whereas they would have had to go with about $5,800 in that rental example to get into a rental. But now they could actually own for less. And they have the tax write-offs because you're not writing off your rent, but mortgage interest, real estate taxes, and PMI under some circumstances are tax deductible. We're not tax advisors. We're not giving tax advice, but generally speaking, all of those things are tax deductible, which comes off your taxable income. So you're paying less taxes on your W-2 job.
And something to put into perspective, like I'm 28 years old, and a lot of people my age don't understand a lot of this information, which is why it's helpful to have someone like you that's talking about it in a comfortable form, not like some commercial that no one watches that's outdated. And so like I'm doing the math, I'm 20 years old, my apartment's $1,750 a month for a studio, plus the electric and everything, insurance, say it's like $2,100, right? I'm looking at new apartments, they want 2 months security deposit. That's like $2,000 or $3,000. So if I move out of my current apartment, get my security deposit back on there, the savings from paying 2 or 3 months of not living in an apartment plus what I would have spent on a security deposit, that's a down payment on a condo essentially. And I could be in my own place.
Exactly.
Building equity rather than renting at these crazy rates nowadays.
And granted, on the other, the argument that we're hearing these days a lot is, well, mortgage rates have skyrocketed, so it's not worth it now. And, first of all, when you get into a mortgage, you're not locked into that mortgage. It's let's say you're getting a 30-year fixed rate, and the rate you're getting today is 6.5%. We refinance, Ian, we talk about this on this podcast, probably to a fault. But we literally refinance for free. Like we give a lender credit. So if rates drop, call it down to 6%, 5.5%, whatever they drop, we'll give them, let's say the closing costs would normally cost somebody $4,000 to refinance. We'll give them that lender credit of $4,000 to pay those costs for them so they can save. So as soon as it makes sense to save, we're all over our customers, like not in a good way, like, hey, by the way, we can do this for you right now. Drop your rate down 0.5%, and it'll cost you not 1 cent to do it. We're gonna let the customers know that too. So if somebody's worried about, oh, the rates are so high right now, don't worry about that. As long as you're comfortable enough and you can afford that payment right now, don't worry about that, because we can always lower it later. We can always refinance it later when the opportunity comes. And rates are going to come down. The reality is they are. I mean, the Fed has already, discussed this. They're going to start cutting rates. It hasn't happened yet, and it's taking a lot longer than people thought it would, but it'll happen. It's a lag effect.
Now, something I think that's very prevalent to people my age that own on the business aspect when they own their own business, are some of these lenders looking at or care about what business they're in? Like you have OnlyFans businesses, you have TikTok, you have Facebook, you have podcast. If I came to you and I have the revenue to say, hey, I'm making this much on an OnlyFans or on a TikTok or whatnot, are they going to frown upon that because that's not a traditional business compared to what it was a few years ago?
No, I'm going to say no. Generally, the answer is no. However, there's definitely some things, certain businesses where, depending on the loan program, they may have an issue with it. However, you bring up OnlyFans, right? I have never done a loan for anyone who is self-employed with that, but my assumption is that they probably file a Schedule C on their tax return that just says, XYZ LLC. It doesn't say OnlyFans. Like, you wouldn't have any idea that that's what it is my guess. I could be wrong. I don't know. Maybe they're a 1099 contractor, but even if that's the case, and they're not getting a W-2 from OnlyFans, correct?
No, they're getting a 1099.
If they're getting a 1099, we don't need to see 1099s. All we see is the Schedule C. So if you are working with OnlyFans and you got a 1099 from them, you could set Ian Bick Productions as the name of your company, and we just report income, and there's your receipts or your gross income, and you wouldn't see anywhere what it is. Yeah. Your job is, you're the president of Ian Bick LLC, and that's your title is president. That's how it would be set up, because that's technically what it is. You don't work for OnlyFans in that case.
And on that topic, you had a conversation with one of your loan officers about how you guys had a client who was running everything through their personal bank account, like a sole proprietorship type.
Yeah.
There's a lot of creators and influencers and people in my field that aren't business savvy and don't have it structured under a business. Could they come to someone like you and they have the records to show how much they produce, but they might not have it saying, Ian Bick Productions or whatever?
Correct. Yeah, there's many different ways to do loans. Now, listen, if they're not declaring the income anywhere on their tax returns, that makes it different. However, there's programs that we offer. They're all called alternative documentation programs. So we have one program specifically, I think you're referring to the one we talked about, which was called our P&L only, where all we need is a profit and loss statement for this business. That's it. And we will need a CPA, a tax preparer to, basically put it on their letterhead and give it to us. We won't need a tax return. We won't need any other verifications other than that under that particular program. So that's one way to do it. But let's say another example, you say, okay, well, they weren't so savvy to set up, this business. First of all, just because somebody doesn't go to the state of Connecticut, create an LLC, doesn't mean that they can't file a Schedule C on their tax return and report that income. They absolutely can. Just because they didn't go to the Secretary of State and form Ian Bick LLC, it doesn't mean that. A lot of people have businesses that they just run through their Schedule C doesn't require them to have a license to do it. Some businesses do, obviously. Like if you're a contractor, you have to have a license. But like say somebody wants to sell stuff on eBay, you don't need a license for that. So you could say someone just once goes to yard sales and buys everything and then puts it on eBay and sells it, makes money. You don't need a license for that. So you could just put your income and assets under XYZ eBay store and that's it. You don't need all that fancy stuff. But let's say you're running it all through your personal account. We can use personal bank statements as long as it appears that it's actual business income that's going in there, and we'll use a portion of that for the person's income to qualify them under one of these other alternative documentation programs.
Now, on the topic of felons, can a felon become a loan officer? Is that an option for them?
That's definitely harder. Yes, it depends on what type of crimes were done, but a felon, if it's been, depending on the crime and how many years, they're not going to be able to do it right away. And again, every state is going to be different too. State requirements may may differ. But yeah, it is possible. They could become a loan officer.
Because I always hear you talking about hiring and loan officers and people making switches and stuff. Because I think some felons could become a realtor. And I know you have been promoting realtors coming over.
Yeah. No, my biggest, as far as hiring, our biggest thing right now is we are looking for people who've been doing it, not because of any prejudice, but because the time it takes to train and teach someone new in this business is an incredible amount of work. So when we talk about hiring realtors, it's because they're already vested into the real estate business and they have connections that someone who wasn't a realtor probably wouldn't have. And they understand a lot of the lingo, even though they don't know as much as they probably think they do in terms of how it works. But, Chris has talked about this a lot in the podcast. But yeah, we would definitely, you can definitely get a job as a loan officer depending on timing.
Yeah, I know a lot of people are definitely interested in, exploring other career options, especially in a world where they're getting tired of working for their employer.
Yeah, that's why I opened my own company.
Now, something else I realized about your company is that you don't charge for that initial sit down. And you can, if the person's not qualified right away, you'll help reach them or get them to their goals. And I think that's valuable information because a lot of individuals like myself would think, oh, we have to go and pay for a financial advisor or someone to help us take that next step. Can you talk about if I called you up today and I'm not qualified, what would you do next?
So that's a great question. Thank you. Because this is something that I don't talk a lot about, but it's a huge benefit for anyone coming in new. And I think it's the same kind of thing with somebody who is a young kid, knows absolutely nothing, scared, and they don't know anything. We love to educate. So if someone comes in new or someone comes in banged up, credit is horrible, we've seen it all. We've seen it all. So we'll get the application. We will pull the credit. We do it, and just so you know, we do a soft pull on the credit. This is something that's a lot newer, so it's not a hard pull. It does not count as an inquiry because a lot of people are always worried, our credit score is going to take a hit if you pull our credit. Not if we do a soft pull. Soft pull does not count as an inquiry. However, we get your exact credit report. It looks exactly the same as when we do a regular pull. So that's one thing. And we're going to analyze it. We're going to look at it. Maybe it's you don't have enough time in the job for the type of program we need to do. Maybe it's your credit scores are too low. Maybe there's some other things going on. We're going to analyze it. We're going to go over it and say, okay, hey, unfortunately, there's nothing we can do right now. However, here's our advice and here are the steps you can take, to get yourself in the position. And it depends on what it is. If it's credit related, we'll say, hey, this is what you have going on. If it's really bad, we may want to refer them to a credit company that we trust that has done stuff. But what I find is most people with credit stuff, it's not something they need a credit repair company for. I mean, I think credit repair companies are great. Depends on the situation. A lot of the stuff is hey, you have all these, a couple of these medical, everyone has medical charge-offs. In this area, the amount of people I've seen with a medical collection from Danbury Hospital that they had no idea they had because it's just horrible what they do. But you say, hey, listen, if you pay this off right now, your score might actually go down right away, which nobody understands it. And they think that sounds really stupid. And I think I agree, it sounds really stupid. But what happens is now there's less stuff for your credit to base your score on. And when you pay off a collection, it just shows that collection is a zero balance. It doesn't remove it that it ever happened. It still says, hey, you were just in collection last month. So because of that, your score is bad. Basically, I'm just saying how it works. So what we'll advise people do is, a lot of these collection companies, you can a lot of people try to settle. Oh, I'll pay half. Will you take half to settle? And they will in a lot of cases. But what I've been having success with is people saying, listen, I'll pay you the full amount right now, but you have to give me a deletion letter. A letter that deletes the entire account off my credit like it never happened. And people have been getting that from collection companies because, they're not going to do that for you if you settle and pay half. But if you pay the whole amount, they may do that. I've had people have success. And then immediately their score jumps 100 points because it's not like it's information that was just paid last month. It never happened in the eyes of how the credit report looks at that. So those are things we'll show them, hey, if you can get that done. Or we'll say, hey, you've been on your job for this long. Once you've been on for this many more months, this is what we'll be able to do. So we'll give them we'll give them a whole, kind of to-do list, a kind of a, here's your plan, here's your roadmap on how you're going to get a mortgage, and then they'll check in with us. And we've had a lot of success where, a lot of people just follow the advice and listen, and it's rewarding for us. We love to see that. We love to help people, who were here that weren't quite there, and then they make it, and there's no fee for that. There's no charge, and there's nothing to be ashamed of. Like, how do you know what to do or how to get there, in a profession that you're not a professional? You need advice from, somebody who knows what they're doing. So don't feel bad about or feel like you're wasting anyone's time, and it's not a problem. We're here to help.
And on that note, on the same thing, to boost you guys a little bit, you go to a landlord, you pay the credit application fee. Mm-hmm. They say no, they're not giving you a why or helping you say, hey, come back in 6 months. This is what you need to work on to rent from us. Whereas they go to someone like you, you're looking at the long term. You're not saying don't ever come back or don't apply again. You're encouraging people to work on these things.
And those people, I guess I've been doing this for 26 years now. Some of those people I helped like that 20 years ago, now they've gone into their 4th, 5th house. They've referred their brother, sister, aunt. Like the amount of people that they refer in spades because of how grateful they are that you helped them when they needed help. It works. It's a long-term thing because you could spend hours with people that turn into nothing for a long time, but eventually you do the right thing, things come back to you.
What do you think is the biggest misconception from younger adults about the mortgage industry and meeting with someone like yourself?
Yeah, the problem is the lack of education. Aside from but the biggest thing I'm seeing right now from the younger generation is rates are too high. It doesn't make sense to buy. That it's cheaper for me to rent than it is to buy, and that's just not true. I would say the only case somebody should be renting are 2 reasons. One, if they really don't qualify, and then they should get a roadmap from someone like us to teach them how to do it. Or 2, someone knows they're only in this area for a short period of time and they have a plan to move to another state or this or that. Then that's another situation. But if that's not the case, everyone should buy, because think about it like this. Let's say you're young, right? You may move on, start a family, and want a big house, 5-10 years down the road. You should still buy something right now with minimal amount down, because guess what? Now this becomes an investment property for you down the road when you want to move on to, your next single family. I don't know if you remember, when we had attorney Yorio on here a month or so ago, he talked about the same thing. So you want to buy as soon as you can and own, because you're building equity, you're getting the tax write-offs, 2 things you're not getting renting. And, if you're worried about the rates, you can refinance it as soon as rates come down. And now you have something that is a ton of equity by the time you're ready for your next house. And you keep that and you rent it out, and that'll help you pay for your new house, because you're going to probably be making money at that point. So
say someone fresh out of college that lands a great job, 6-figure job, should they be apartment hunting, or should they be coming to see someone like you?
If the job is a salary, in that case, we can qualify them on that salary the day they start the job. They actually don't have to have any time on the job under most of our conventional type of programs, because college, we'll get college transcripts in that case, to document that, hey, for the 2-year, because we always want to document a 2-year employment history. Also, we'll show, hey, the prior 2 years was college education. Here's our transcripts. Here's a degree. And here's the job. Here's the job letter. Here's a salary, $100,000 a year. Great. You're getting $100,000 a year credit for your income, and you're good to go. And with conventional loans, there's no trade line requirements. You don't have to have all these trade lines to qualify. As long as you have a credit score that works, it's you can get a loan that way. So yeah, it's there's no point. And some of the first time buyer credits we're offering right now are incredible. So when you can buy with the same or less money out of your pocket than it costs you to rent, why would you rent? You tell me, why would you rent?
Doesn't make sense.
Exactly.
And for so long, like I grew up, and if I grew up with that mentality about how I didn't think I could ever get a mortgage, and especially not even after a felony, but just in general, like you needed years and a big, like, what was it? Used to be like 50 or 60 grand you need to have saved up and this and that. Totally different experience, but how many other people my age are there in the world that think that way? There's got to be millions, And
one of the other things I want to point out, you brought up with the younger generation. The younger generation, I love are so tech savvy, more than me, obviously, because I'm a dinosaur. But I love it because our systems are state of the art. Like, we have the most, state of the art, high tech, between online application, uploading stuff, everything is secure. The younger generation loves to do things that way, where the older generation, they want to call you, they want to come sit down, they want to go through it. Not that that's a problem, but for me, I can service, 5, people that want to do things, like this, versus one person that wants to do it the old school way. So for us, it's actually more productive. So we love it, and I think too that knowing if the younger generation doing this knows that it's easy like that I don't need to talk to anybody on the phone if they don't want to. If they would rather communicate through email and text and uploading, that's fine too. So it's I know a lot of the younger generation prefers to do things that way. So that's something we totally have embraced as well.
Yeah, that's a great topic, because sometimes I'll fill out an application for whatever, an apartment, a business loan, anything on my phone or computer. Right away they're calling me. And to me, that's like an instant turn off, because I could be in bed or whatever doing something, but I'll still want to do the deal, but just not over the phone. Like for the initial things, any follow-up information, shoot me an email or a text, and that's big in today's world. Yeah, no, and honestly, we are, like, it's funny too, because I get people all over trying to give me business lines of credit and things, and I'll respond to something, and then all of a sudden I'll get like all these phone calls. Like, we don't do that. Like, I would tell you guys, I will not do that to you. We will not do that to you. We may call you to make sure, like, if we don't hear from you, hey, just make sure you did get our email. Like, but it's not going to be calling and attacking you. It's just to make sure you actually got it. And if you don't want to talk to us, fine. But we'll email and we'll text. If you sent us a text, through all these forms we have now with the messaging too. Now we're getting messages through all these, social media pieces, emails, inquiries through the website, so we can communicate with you however you want. We've embraced technology. We love it. It's like a relationship. You don't call the girl crazy back and forth in the first couple of dates. You build up to it. So obviously there needs to be phone calls when you're getting closer to a deal and this and that.
Sure.
But not like the second you fill out an application, here's a million phone calls.
No, there's some people that, I'll be honest with you, there's a lot of people that we've done loans for that I'll have one conversation and that's it through the whole transaction, because that's what they want. Mm-hmm. They don't want it. They don't want to talk to me. And that's honestly, we make it so straightforward and simple that we put the needs in an email, and it's like, this is what we need from you. Let me know if you have any questions. You can call us, talk to us, or they'll just usually respond back, oh, okay, great, I got this. What about this or that? And then, they don't even want to talk. So it's just whatever makes people comfortable. We're here.
Now, I'm sure there's going to be people that see this that are like, wow, James is great, really on point with this, but he's in Connecticut. How can he help me? There's not guys like this in my area. You're in other states, right?
Yeah, thank you, Ian. Yeah, we're in 10 states right now at the moment. So Connecticut, New York, New Jersey, Massachusetts, Pennsylvania, North Carolina, South Carolina, Florida, and Texas. Wait, did I say Georgia?
I think you said Georgia.
I did, sorry. Yeah,
I said it again.
I try to think of it from like the top down, and then Texas, takes a left. But so 10 states. So we do. And actually, just to touch on that, if this isn't for the purpose of a primary residence, if somebody's looking for investment property loans, we can do investment property loans if it's in the name of an LLC, if they're buying a property in an LLC name. That's considered business purpose. So we don't have to be licensed in other states to do loans that are business purpose loans, which we consider anything that's investment in a corporation or a company name instead of the individual name. So yeah, I mean, actually,
that's big.
We couple of people who have seen our social media, just like you said, have reached out from Kansas City, from Alabama, and because of the type of loans they were looking for, we're able to help them.
You should definitely do a whole episode on like business investing, because that could reach. We were talking about algorithms. The potential on TikTok.
Okay, there's our next 2 weeks.
I would definitely find like a business investor, maybe someone that you've financed to or something like that, that you could bring on to talk about that, because I think that'll do great in the algorithms. And you're probably one of the, you don't see too many mortgage people like on the TikTok stuff. So it's cool seeing like a different perspective on there of you putting that information out, especially in a small town like Danbury, Richfield, like this area. I don't even know what to compare it to.
Well, the whole point, like, it took me forever to start doing this filming. mainly because I was like, I don't want to just do a podcast just because I know it's good for my company. Like, I want it to be something I'm really passionate about, something that I feel there's a need for. And most of the mortgage stuff that I see is not really that educational. It's not. Like, I want to look at something that's like a mortgage. In my mind, I would say, all right, if I'm a consumer, someone that's renting, potentially looking to buy, someone who owns a home, someone's a real estate investor, a realtor, or another loan officer, I say, what am I getting out of this after I watch this? What did I get out of that? What did I learn? What did I take away? And I focus on that and try to give that. So somebody who's watching it, listen, some of our podcasts are geared towards realtors, some are geared towards loan officers, and some are geared towards the consumer. It's all different, But if it's geared towards the consumer, I want them to learn something from this. And if they didn't, I didn't do a good job, and it's a waste of everyone's time. Because what's the point otherwise? I'm nowhere near as entertaining as you.
Well, it's different. I mean, and that's where I've been. Everyone has their ability to excel in like a different way, and I found a niche market that hasn't really been. I was at Spotify yesterday, and they were like, we were looking.
I saw that on your Instagram. That was awesome.
They were looking up my show before they reached out to me, and they're like, there's really nothing to compare the show to because it's the first of its kind, and I think that carries over to like someone like yourself, a business professional who was. Back in the day, maybe depended on billboards or not social media in this setting to ever do it. Right. I think that it's just a whole new world, and what your ability to be able to adjust and pivot and be open minded carries over to how you treat your clients. You're always talking about creating a way to close a deal.
Yeah, no, it's thank you. I mean, we do, we really do. We don't, we have plenty of loan officers too, so it's not like it's just me trying to do everything. And everyone, we have our culture and our philosophies, and everyone's part of the same goal and our same mindset. That's our thing. If you help somebody and you do good things will come back. Just because oh, sorry, you don't qualify today, you're wasting my time. No, you're not wasting my time. Like, let me help you if you're willing to listen. Most people are willing to listen and they really appreciate it, which is great, and then when they, eventually they come back, awesome.
Who are some people that you want to bring on the show to have like different perspectives of the mortgage industry and even maybe things that you're not passionate about? Maybe one episode you're doing a chef to talk about, your favorite food, you never know, but what are some people you want to have on? Definitely,
I think my CPA is very busy, and this is a horrible time of year. So I definitely need we need a good CPA, because you hear me lots of times say, oh, well, I'm not a tax advisor. I'm not able to, I know obviously a lot about taxes, but I'm not a tax professional. So I'm not going to give tax advice. But if I can talk about these things and say, hey, so-and-so, what's the deal with this? And where is the PMI limits tax deductible? Where aren't they tax deductible? And let's do a scenario where somebody has a $3,000 a month rent versus a $3,000 a month mortgage, and they make $100,000 a year, $100,000 a year. Show me the taxable income difference, and what does that actually equate to? Like, people would love to see that. I think someone who's renting, if they see that, they're like, wait, so really a $3,000 a month mortgage payment is really more equivalent to like a $3,500 rent payment when you factor in the tax advantages and the more money back in your pocket every year. I think stuff like that people would find, and especially with specific examples. Like I like to give, like when someone comes to me for a pre-approval, I keep it simple. I say, just send me some listings that are kind of in the range area of something that you're interested in. I want to use a couple of those to give you say, hey, based on your qualifications, if we were to close on this in the next 30 days, here's exactly what it would look like. And I break it down. Hey, here's the payment rate, principal and interest, taxes, an estimated homeowner's insurance payment, and give them a realistic, hey, if I wanted to buy this house, this is what it would look like. And people like real examples. I feel like that's the easiest way to show people,
You know what I think would be great? Bring on a young couple. Someone that's under their 30s or even young, the youngest we could get, that's a young that just maybe they could be single, or I think a young couple would be great. So you get that dynamic of how they made decisions together. And you did a great couple short videos a couple months ago about, who owns a house, what if we get divorced, things like that. And if new home buyers are even considering that, like all those things, I think that would be some great educational content out there.
Let's do it. Yeah. I'll try to think of some people myself to invite on. If you have any suggestions, we're all ears.
Yeah. So are you ever going to let your kids rent?
No. The answer is no.
No apartments.
We'll work on, an internship where they have to work off, if I have to lend them the 3% or whatever we have to get. But no, they're all going to own.
Is it crazy how when people are born into certain families, like if you're the son or a daughter of a lawyer, like you have legal coverage, like if you're the son or a daughter of a mortgage lender, it's very interesting how that all works. It is, because that's when you do something, that's what you're passionate about. That's what you do, and you just instill it, you know. But yeah, that's good. I've never even thought about that until you just said it, but I'm like, of course not. Gives you a different perspective. That's why you gotta be here,
For sure.
But I like how energetic you are and passionate, and there's so many people you meet, and it's just like the energy or the passion's not there. Like when people come into my business, I'm very passionate about this. It's like creating, because you're literally taking. When we took over your TikTok, what do you have? Like 20 followers, maybe?
You're being generous.
And now it's over it's 1,100.
It's like almost 1,400 now.
That's really exciting. And,
and it was all organic. That wasn't like, hey, like this, or paying people to follow you. That was all. You
didn't pay $1 in ads for TikTok.
Not $1.
No business profile. That drives me crazy when people pay for the ads or the business profiles and stuff. Do it organically, and it takes time. There was 2 months where we got 30 or 40 views a video, but it crept up. Now I think our baseline's at like 700 or 800.
Oh yeah, all the ones in the last week have gotten, I think, at least 1,000.
That's awesome. Because of the new lighting.
Got to be the lighting.
The banner. No, the banner does the way we have it now with this lighting and stuff. It looks a lot better.
I love it.
And on this brown color rather than the white.
Yeah, no, it looks really good.
And having the flexibility of the two colors, 2 walls in here, I think really makes a difference, because then you can change up your angles. You could show your good side of your face and everything.
It's the mic boxes. It's just the mic boxes.
Yeah, it's really cool. Was there anything else you wanted to cover in today's episode?
There's one thing I wanted to this has nothing to do with the topic today, but it's something that is very new that I just wanted to, so we could obviously do a TikTok clip on this.
Of course.
Is previously, a lot of people, in order to get a HELOC, a home equity line of credit on an investment property, you had to go full income verification, where you had to be able to provide tax returns and go a traditional qualification method. But now we've just opened up our alternative documentation programs, where we could do a HELOC on an investment property with no tax returns for someone that's self-employed. So that's huge, because a lot of people who own investment properties right now, they have a first mortgage that they got 2 years ago, 3 years ago. They might have a 3, 4, 5% rate on that, and they don't want to touch it, but they have a lot of equity. They'd love to pull it out, but they're not your traditional borrowers, because they own businesses, they have lots of properties, so they don't qualify on paper, or they don't want to provide all the countless paperwork for someone like that. So now we can offer a HELOC, and you can pull that equity out without touching that low first rate mortgage on an investment property. No tax returns. Pretty cool. It's something that we need to let people know, because we've had ourselves the amount of people we've had looking for that in the past, whereas it wasn't available until more recently. So yeah, that's it. I just wanted to share that.
No, that's awesome, man.
Ian, thank you so much. I really appreciate the opportunity to have you being such an incredible influencer to help support this cause and get our message out. Hopefully, some of your viewers will appreciate it and enjoy and have learned something.
Absolutely. Yeah. You're part of the Creative Evolution team over here, James.
Love it.
You're the day one.
Yeah. Appreciate it. Thank you, everyone, for watching today's podcast with Forte Financial. Stay tuned in future podcasts. We're going to have a CPA on here. We're going to have a compliance attorney talking about the MSAs between real estate companies and mortgage companies. A lot of good stuff coming. Thanks for tuning in. We'll see you soon.